Are you looking to understand how you can finance flip projects here in Canada? If that's what you're looking for, this video is made for you. In this video, I'll be showing you how you can set up a business plan, the mainstream ways to finance flips, the not so mainstream ways to finance flips, secondary financing and promissory notes, because everybody would love to have cheap financing. Flip to yourself. Can you keep the property instead of selling it? And lastly, how to have a realistic timeline. So number one, let's talk about your business plan. Before we discuss any financing options for flip projects, you actually need to think about what your business plan is going to be. Sharpen the axe before you cut the trees. There are a few considerations. For example, number one, are you looking to acquire very distressed properties, or are you only looking to buy properties with only outdated cabinets and stoves, and etc.? I have seen people doing really well with both business models, and the type of property you are buying will determine what kind of financing you can get. For example, if you're buying a very distressed property that are not habitable, then your best friend for getting financing will be private lenders. But if you are buying livable properties with only outdated finishes, then you can actually get institutional financing to help you close on these properties first. Consideration number two, how many flips are you looking to do? Let's be honest, how many flips do you actually want to do in a year? Some people do flips because it can be a great side gig, and some people want to become flippers because that's all they want to do for a living. So if you're flipping, let's say 2 properties in a year, and you're buying a property in livable conditions, and you can actually apply for institutional financing, which is going to be cheaper than private mortgages. But now let's say you want to flip 20 properties in a year, and you will be better off obtaining financing from private lenders. We can try institutional mortgages, no problem, but very soon the institutions will realize that you're flipping properties, which is not a business model that they can support, unfortunately. And if you are indeed getting institutional financing, make sure you have the term set up right. Otherwise, you will have to pay expensive penalties, and these penalties can easily eat into the profits. And if you're dealing with private financing, make sure to customize the term and understand the fine print. Some of the private lenders are great, and some of the private lenders are very sharky. Private mortgages in general is a less regulated lending field. Now let's talk about the mainstream ways to finance flips. As we discussed earlier, most of the flips are financing by private lenders, and most of the deal are outsourced from the seller or from the wholesalers, sometimes from MLS. With the deal sourced from wholesalers, usually the wholesaler will charge a wholesale fee or an assignment fee, and that is usually a fee the financial institutions or the banks will not finance. Financial institutions are looking for easy to understand and cookie cutter deals, and if there's an assignment fee on the statement of account, they will likely get confused, and a confused mind will say no. When dealing with private mortgages, make sure to pay extra attention to terms, lender fee, interest, renewal fees, renew terms, and other fees as well, such as servicing fees and discharge fees. Why do they matter? You want to get the right term because you want to make sure you're getting enough time for you to renovate the property and also the time to sell it. Dealing with contractors and buyers may actually take more time than you think, and the worst situation is running out of time and the term is going to be matured, because that means you will not have to renew the mortgage, and most of the private mortgages will be renewed at a fee. Lender fee and interest rates, of course, these are very important because that's the cost of doing business. You want to find a lender that charges as little fee as possible, and similarly, an interest rate that's as low as possible. The cheaper the lender fee and interest rate, the more profits you can keep to yourself at the end of the day. Renewal terms are also very important. Like I mentioned earlier, most of the private mortgages will be renewed at a fee. There are some really sharky lenders that will allow you to get into a private mortgage because they know for sure that you will have to renew the mortgage. So they set up their lender fee very low for you to get into it, but once you have to renew, they will charge expensive renewal fees because they know you have nowhere else to go. And also pay attention to other fees. Some lenders will have inspection fees, documentation fees, wire fees. Some lender will have very expensive discharge fees. Once again, all these fees will eat into your profits, so make sure you understand the true cost of doing business. Now let's talk about the not so mainstream ways to finance flips. As I mentioned earlier, you can actually use institutional mortgages to help you flip properties, but it's only suitable for people that are flipping only a few properties a year. Because if you do flips in large volume, and given there are only so many lenders available in the Canadian market, very soon they will find out that you are flipping properties, and most of the banks are not equipped to support this kind of business. Although I do think flippers are bringing more inventory to the housing market, which is something we can all appreciate. Next, I want to touch on secondary financing and promissory notes. All investors will want to minimize the equity they have to put in, so they will use secondary financing and sometimes promissory notes, which is a unsecured type of lending, to complete the capital stack. Now, with private lenders, some lenders will accept secondary mortgages, third mortgages even, to be placed behind them, but some lenders will not. And you must confirm if the lenders are willing to let you do secondary financing behind them. If they don't and you do it, that's a breach of contract, and automatically you're in a mortgage default. Promissory notes are very tricky to trace because it's an unsecured type of lending and it's definitely not a register on title. So if you do want to use promissory notes, it will be ethical and a great practice for you to disclose this fact to the lender. Next, I want to talk about if you can actually keep the properties, because I strongly believe money is made in holding assets for as long as you can and pay down the mortgage. Some flippers, before they even purchase the property, know very clearly that they will be selling the property, and some people will actually want to keep the property after renovation. So if you do decide to keep the property, you will be 100% better off having a bank mortgage on the property. So the key to understand if you can actually keep the property is to do a financial feasibility study before you even purchase the property. So how we will do the feasibility study is we will look at end value as if the property has been renovated, determine what kind of loan to value can be achieved, and see if your income and your credit profile can qualify you for a new mortgage. If you cannot qualify, we can offer you advice on how to restructure your income and polish up your credit profile. Lastly, timeline. So a lot of flips are done within less than 6 months. And let's say you purchase a property for $500,000 and you put in $150,000 in renovation. Now it's worth $700,000. Great. We want to get the loan up to 80% of the $700,000, which is $560,000. But there's a lot of banks that will not accept the new value of the $700,000 because they will look at the transaction history and they will see that you purchased the property for $500,000, now it's appraised for $700,000. They will become concerned of the sudden jump in valuation. So fortunately, we have gone through these situations many times with our clients, so we know which lender and what product we can use for you. That way you can refinance within 6 months, get a new loan based on the new valuation, and start recycling your capital. Hire us and leverage our business resources. So that being said, this video is a snapshot of how flip projects can be financed here in Canada. If you're looking for additional help, please go to my website, KaiLu.ca, to book an appointment with me. I look forward to helping you and see you next time.